Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Gold and silver in the green. We have gold up $23 at $1,664. Silver almost $15, up to $14.95, up 20 cents. Right now, we are definitely in a small rally. It could be much bigger with a lot of upside potential. So I was curious to see what the gold to silver ratio is, which is 111 to 1, meaning it takes 111 ounces to equal 1 ounce of gold. 111 ounces of silver to equal 1 ounce of gold. So with that said, I found this article talking about why silver prices could surge 535%. I have another article talking about $3,000 gold. We are definitely in very interesting times. This could be the opportunity of a lifetime, especially if we do see the prices that some people are foreseeing. So the links to these articles will be in the description. With that said, make sure to smash the like button. Let's see if this video can get 100 likes. Everyone like this video right now. Also make sure you subscribe because I do post daily videos. I am your guy if you want to stay updated on a day-to-day basis of what's happening in the world of precious metals. So with that said, let's jump into this video. So, silver prices have been seeming severely undervalued. If you are not looking at silver now, you could be kicking yourself later. It could be a no-brainer 10-bagger trade. And that's the thing is, in the future, we can go fast forward ourselves in the future a couple years, and after silver's already skyrocketed, we would look back at these times and be like, it was obvious. It was a ticking time bomb waiting to explode. Gold to silver ratios at all-time highs, silver shortages across the board, silver's used for so much, it would be obvious. But right now, it doesn't seem as obvious because there's all this emotional attachment involved with all this controversy and chaos. So it kind of puts a blindfold on our eyes to see what's really going on right now. So right now, investors are in panic mode. No matter where you look, there's pessimism. And investors are selling everything and anything in sight. No surprise, there's been a lot of selling in the silver market as well. And of writing this, silver prices have come down roughly 32% year to date, around $12.20 an ounce. And silver is correcting itself back upwards. We see silver to the $14.93 place now. But right now, if you look at silver price chart, you might see trends pointing lower in momentum, suggesting that things could get a lot worse. But in the midst of all this, there's one thing that investors really need to pay attention to. They also should ignore a lot of the noise that's out there. Once in a lifetime event just happened in the silver market. Look at the chart below. It plots the gold to silver ratio, one of the most important tools to share which metal is the better investment at that point in time. For long-term readers of the Lombardi letter, this chart shouldn't be something new. It has been mentioned several times, and at its core, the ratio tells us how many ounces of silver it takes to purchase 1 ounce of gold. It is one of the best measures of silver's valuations. When the gold to silver ratio is low, it means that silver is overvalued. If the ratio is high, it means silver prices are low. Now you see the ratio has done something extraordinary recently. So as of writing this, the gold to silver ratio stands at 121 to 1. And we actually saw it go all the way up to 124 to 1 before it started correcting back down. So it means it takes 121 ounces of silver to buy 1 ounce of gold. We have not seen a ratio this high in recent history. In fact, it wouldn't be wrong to call this a once-in-a-lifetime event because it's never got that high before, ever. Not in recent history, but forever history. So what does it mean? The gold to silver ratio says we could be seeing a great opportunity. The price of silver is severely suppressed. It could be foolish to overlook the gray precious metal. Here's some more perspective on where silver prices could go. Since the precious metal started to trade on the markets, the average gold to silver ratio has been around 45. So assuming the ratio moves toward its long-term average price and gold remains around the $1,550 level, price of silver would have to go to around $34 an ounce for the gold to silver ratio to reach 45. That's a 180% increase above the current price. But know this, in unprecedented times, we've seen this ratio go as low as 20. Assuming that we are headed toward one of those times, assuming the gold prices don't change, the silver price would have to be $77 an ounce for the gold to silver ratio to reach 45. That's a 535% increase above the current price. So $77 silver would make a $535 increase. If you ignore silver, you could be kicking yourself later. Do not miss the boat. Do not be one of those people kicking yourselves wishing you got in. Dear reader, I have been following silver prices for several years now, and I have not seen any opportunity like the one that silver is presenting at the moment. I have been bullish on the gray metal for a while already. The recent surge in the gold to silver ratio has made my convictions even more strong. As I see it, the recent sell-off has been nothing but a blessing in disguise for those who are looking for the next big trade. Here's what I think. Right now, the price of silver is down, but when it starts to move higher, we could see a violent move to the upside. When that happens, it just won't be those who own bullion who see immense returns. Mining stocks could improve leveraged gains. So just a lot of potential. And if we're going to talk about high silver prices, we got to talk about the potential of high gold prices. And that's what this article is going to be mentioning. So gold tumbled to the negative on the year due to liquidation-driven selling alongside broader markets and treasuries. Seasonal weakness and lopsidedly long positioning in large speculators have added a near-term pressure on gold, and ballooning Fed balance sheet and federal deficit versus GDP suggest a breakout to new all-time highs in gold on the horizon. We reckon any dips will be great buying opportunities to build a long-term position in gold. So the wrath of the margin call selling spared no one, as safe haven including gold and treasuries were also dumped during the epic collapse of the stock market. Particularly for gold, the slump wiped out 7+ % year-to-date gains have turned negative within a matter of 2 weeks. So cash is king became the predominant theme with the US dollar in the verge of breaking a multi-year high. Until recently, gold had been able to rally in the tandem with the US dollar, as pointed out in the previous article, through the liquidation-driven chain selling, proved too much to overcome for the precious metal. For a bigger picture, gold remains on the long-term recovery uptrend since bottoming in 2016 and found support as its rising 50-week moving average. So, gold's long-term prospect is brighter than ever as Fed goes nuclear. And as the Fed keeps dropping bombs, as this article is kind of saying, it's only going to activate more momentum for gold to go higher. As discussed in our last article, despite the possibility of short-term tops, we advocated taking a long-term bullish view on gold based on the two premises that Treasury yield curves has reinverted while the Fed's balance sheet is about to expand again. Actually, on the latter, explode became more appropriate term in the light of the Fed's announcement of unlimited QE today, from a wit from MarketWatch. So, the Federal Reserve on Monday announced it would be purchasing an unlimited amount of treasuries and mortgage-backed securities in order to support the financial market. The Fed said it would buy assets in the amount needed and support the smooth market functioning and the effective transmission of the monetary policy. So, this is really looking like gold has opportunity beyond a reasonable doubt. So, when we're looking at the Fed balance sheet versus gold, you can see where things could get sticky. Federal deficit versus GDP percent, even more important long-term bullish indicators. While the Fed's infinite monetary stimulus has become on the spotlight, another indicator that bears the profound significance on gold's bullish outlook is the imminent ballooning federal deficit. Is a recession on the way? Indeed, extraordinary fiscal spending to cushion the damage from paralyzed economy arguably exceeds the during World War II in terms of numbers, according to CNBC. A $2 trillion deficit, which seems very conservative given this current scenario, would push the deficit to 9.4% or a $3 trillion downfall, which seems like not much of a stretch. It would take the level to 14%. So this stuff is scary to some extent because we are overspending to ways that we really don't have money to be doing this, and I definitely think that whether it's monetary policy, whether it's the Federal Reserve cutting rates, whether it's the recession looming, whether it's surplus, the supply and demand of precious metals, whether it's COVID-19, whatever the case is, things are getting exaggerated to very large degrees, and it's only dangerous. We're going into dangerous waters where we won't be able to recover from this. We're putting ourselves into a very vulnerable situation in the economy that I don't think people understand the consequences that are going to be coming from it. So anyways, just to recap a little bit, silver is sitting at $14.93, up 2.64% on the day. The gold to silver ratio is sitting at 111 to 1. Prices could be, if we see $77.50 silver, that'll be a 535% increase, which is definitely possible given the circumstances, but I do think gold will be rising as well. So, I definitely see gold and silver both extremely bullish in these times. The link to these two articles will be in the description if you want to check them out yourself. Make sure to smash that like button. I'll be posting more videos today, so stay tuned for that as well. This was Silver Slayer. I'll see you guys soon. Peace.